Imagine this: every dollar in your wallet, actually someone else's debt. That green paper we worship, save, and chase our whole lives was born from an IOU. And here's the paradox that haunts modern civilization. If money is debt, then who lent the very first dollar? This is Hidden Finance File, where money, power, and truth collide. To understand the birth of the first dollar, we have to step back, not just in time, but in logic. Because somewhere between trade, trust, and power, humans created something extraordinary, a symbol of value that didn't exist until we all agreed it did. Picture the ancient world: markets without paper, without banks. A fisherman trades his catch for the potter's jars. A farmer exchanges grain for cloth. It's not perfect, but it works, until one day the fisherman needs tools from the blacksmith. But the blacksmith doesn't want fish. Barter breaks. So, humanity invents a bridge, something both can trust even if they don't trust each other. That bridge was the seed of money. At first, it was tangible: gold, silver, shells, salt, things that had value because they were scarce or beautiful or hard to find. But then came a quiet revolution, when we stopped valuing the thing itself and started valuing what it represented. Enter paper money. In 7th century China, merchants tired of hauling heavy coins began using promissory notes, pieces of paper that promised payment in gold or goods later. It was easier, faster, lighter, and eventually it was trusted. That trust, not the paper, was the real currency. Fast forward centuries later, Europe. Kings waging wars, merchants funding voyages, empires rising and falling, all running on borrowed gold. But gold was finite. The dreams of empires were not. So they found a way to stretch reality. Credit. A banker in Amsterdam, a merchant in London, a monarch in debt. All discovered that a promise written on paper could move mountains. Banks began creating money not from gold, but from debt itself. When a loan was issued, new money appeared, backed by nothing but the borrower's promise to repay. It was magic and madness. But here's the trick that changed the world. The borrower spends that loan into the economy, and someone else deposits it in another bank. That deposit becomes the base for another loan, and another, and another. Money multiplies, not by mining, but by believing. So, back to our paradox. If all money is debt, where did the first dollar come from? Because logically, someone had to owe someone first. But before anyone could borrow, there had to be something to lend. That something was created by a decision, an act of power. Governments began issuing fiat money, currency not backed by gold, but by decree. Fiat means let it be done. In other words, value was declared into existence by authority. It was the ultimate human illusion, power creating reality through words on paper. In 1694, the Bank of England was born, lending money to the crown to fund war. The debt was recorded, the promise stamped, and in that moment, money as we know it was born. Not as wealth, but as a liability. Every pound, every dollar, every note represented debt owed to the system that issued it. The cycle had begun. Over time, America joined the game. In 1913, with the creation of the Federal Reserve, the United States formalized its own version of the illusion. Private banks were granted the power to create money through lending. The dollar was no longer a certificate of gold. It was a certificate of trust. And yet, that trust was fragile. In 1933, President Roosevelt removed the gold backing for American citizens. In 1971, Nixon severed the final link between the dollar and gold. From that moment on, the U.S. dollar was pure fiat. money existing only because the government said so, and the people believed it. But belief can be the most powerful currency of all. When the world trusted the dollar became the world's reality. And soon, every other nation pegged their own currencies, their own debts, their own dreams, to it. So if you zoom out far enough, you see the strange beauty of it all. Money isn't metal, or paper, or digits. It's a system of collective faith, anchored in debt, enforced by power, and driven by need. That first dollar didn't come from anywhere. It was declared into existence. And every dollar since has been born the same way, not mined from the earth, but extracted from the future. But this realization opens a darker question. If every dollar is someone's debt, then who does the world owe its trillions to? And what happens when the lender is the system itself? Because money can be printed, but trust? That's harder. And when the foundation of global finance is built on promises that can't be kept, the illusion begins to flicker. The story of the first dollar isn't about paper. It's about power. It's about the moment humanity realized that control over belief was control over everything. And somewhere in that history, buried beneath the ink and signatures of forgotten bankers, lies a truth we've never dared to face. The real question isn't where the first dollar came from. It's what happens when the last one disappears. The last dollar. The final symbol of trust in a world built on promises. If every dollar is debt, then when the last one disappears, what remains? Value? Or just silence? The truth is, money was never truly about wealth. It was about control. Control of resources, of labor, of nations. And from the moment that first fiat dollar was declared into existence, an invisible game began, one that still defines who wins and who serves in the modern world. When America left the gold standard in 1971, it didn't just cut ties with metal, it rewrote the laws of value. The dollar was no longer a claim on gold, it was a claim on belief, and belief could be manufactured. Because as long as people trusted the dollar, it didn't need gold, it had power. But belief is fragile. So the architects of the system did something ingenious. They tied the world to the dollar through debt. Every time a nation borrows in dollars, it enters a quiet contract. It owes the United States not just money, but allegiance. Oil, trade, development, even survival. All began to orbit the green paper that came from Washington. They called it the petrodollar system, an arrangement that ensured oil, the lifeblood of the world, could only be bought in U.S. dollars. And that decision, made in backroom meetings during the 1970s, cemented America's power. It wasn't about tanks or troops anymore. It was about who controlled the denominator of global debt. When every country owes in dollars, every central bank needs them. And when everyone needs what only you can print, you become the empire without borders. But this empire runs on paradoxes. Because every dollar in existence was created through debt. And every debt demands interest. Yet no one ever creates the money for that interest. It's a treadmill, where new loans must constantly be created to pay for the old ones. Growth becomes not a choice, but a survival mechanism. If growth stops, the system collapses. So governments, corporations, even individuals are pushed to borrow more, spend more, consume more. And somewhere along the line, debt stopped being a burden. It became the bloodstream of the global economy. But like any organism addicted to its own pulse, the system can't stop without dying. Look around. The numbers are staggering. Global debt now exceeds $300 trillion, 3 times more than all the money in the world. It's a number so large it doesn't exist in reality. It's just data, digits, promises that can never be fully paid. And yet, the system marches on, because defaulting on the illusion would mean questioning the illusion itself. That's why central banks exist, not to print money, but to protect the belief that money means something. When crises hit, 2008, 2020, or the next one, they don't save people. They save trust. They pump liquidity, slash interest rates, flood the system with digital dollars, because confidence is the real currency of the world. But every injection of money dilutes the value of every dollar that came before it. Each rescue makes the illusion more fragile, even as it looks stronger. The system survives not because it's stable, but because everyone is too dependent to let it fall. That's the genius and tragedy of fiat finance. In this modern matrix, money isn't created by governments, it's created by banks every time they issue a loan. Your mortgage, your credit card, your car payment, all of it is money being created in real time. And when you pay it back, that money disappears, erased from existence like it never was. The economy is literally made and unmade every day through the rhythm of debt. But here's the deeper paradox. The dollar is the world's strongest currency precisely because it is also the world's biggest debt. America owes more than any other nation in history, yet its debt is the safest asset on earth. Why? Because the system itself is denominated in those debts. In other words, the United States doesn't just owe the world, it is the world's creditor, through belief. And belief has a peculiar way of surviving truth. You see, the dollar is not valuable because it's backed by gold, or productivity, or morality. It's valuable because everyone else needs it to pay their debts. It's a cycle of dependence disguised as stability. And every government, every bank, every worker plays a part in sustaining the illusion. But what happens when the illusion spreads too thin? When the money printed to preserve faith begins to erode it instead? You start seeing cracks, inflation, asset bubbles, rising inequality. The rich get richer not because they work harder, but because they're closer to the source of money creation. When central banks print, the first recipients, banks, investors, corporations, benefit. By the time that money reaches ordinary people, prices have already risen. The system quietly transfers wealth upward, hidden behind complex terms and comforting charts. And so the same paradox repeats. Money is created from debt, but the more we create, the more debt we need to sustain it. It's a self-consuming spiral, a fire that needs its own ashes to burn. That's why modern finance feels like a dream that can't be woken from. A world where numbers replace value and promises replace truth. But maybe that was always the plan. Because when money is debt, the one who controls debt controls destiny. And if belief can be engineered, then so can freedom. The first dollar was born from an act of authority. The next trillion are born from fear, the fear of what happens if the illusion ever stops. But history whispers a warning. No empire of faith lasts forever. Every system built on promises eventually meets the one promise it can't keep: reality. And when that day comes, the real question won't be about where the first dollar came from, but what humanity will use to measure value when the faith that built this world finally breaks. The paradox of money is not that it came from nothing. It's that, even now, we still believe that nothing can buy everything. Nothing can buy everything. And yet, somehow, everything still has a price. That's the quiet curse of the modern world. A civilization where value no longer lives in things, but in numbers that flicker across screens. From the first paper note to the last digital token, humanity has spent centuries perfecting the art of believing in symbols. But behind that belief, something human has quietly eroded. The sense of what value means, because when money became debt and debt became infinite, value lost its anchor. We no longer trade labor for reward or time for purpose. We trade belief for survival. And the system feeds on that belief like an invisible god. It doesn't ask for worship, only participation. Swipe your card, take the loan, chase the raise. The ritual continues, and the numbers keep growing. But beneath the rhythm of progress lies a truth that rarely gets spoken. Money was never the goal. It was the illusion that made all other goals possible. Every empire that rose on borrowed gold thought it could outsmart the laws of trust. Rome diluted its silver. France printed its assignats. Weimar flooded its markets with marks. And every time, the result was the same. When trust dies, money dies with it. The dollar, for all its strength, is no exception. It stands today not because it's flawless, but because every alternative is weaker. It's the tallest tower in a crumbling skyline, a monument to belief so powerful it outlasts even doubt itself. But faith has limits. As governments print more to cover debts, as digital currencies rise without regulation, and as nations quietly seek escape from the dollar's gravity, the world edges closer to another shift. Not the end of money, but the end of what we think money is. Because money is no longer paper or coins, it's data, an algorithmic dream, moving at the speed of light, controlled by systems most people will never see. Banks, markets, central servers, each holding the keys to invisible empires of credit. And the people, lost in the hum of consumption, rarely ask who owns the code that defines their worth. In this new era, power doesn't come from holding money. It comes from creating it. The first digital dollars were typed into existence by keystrokes at the Federal Reserve. The next generation may come from decentralized code, mined from electricity instead of ink. And the irony? Both are born from belief, one in institutions, the other in algorithms. The currency changes, but the faith remains. We call it innovation. But perhaps it's evolution. The system adapting to keep the illusion alive. From shells to silver, from gold to paper, from paper to pixels, every transformation has been less about wealth and more about control. Each new form of money brings humanity closer to convenience and farther from freedom. Because when value lives in code, it can be frozen, tracked, erased. When your money is a digital entry on a centralized ledger, your freedom is one click away from deletion. The modern world doesn't need chains to control you. It just needs your dependence. And that dependence is growing. As debt deepens, as wages stagnate, as everything from food to housing to education becomes collateralized, we find ourselves trapped in a system that doesn't need to enslave bodies. It enslaves time. You don't own your hours owe someone else. That is the true cost of the first dollar. But there's still a paradox. The same paradox that began this story. If all money is debt, and every debt is a promise, then the only thing that truly holds the world together is trust. Trust in banks, trust in governments, trust in each other. And trust is not a number. It's a choice. Maybe that's where the next revolution begins. Not with gold or crypto or another form of currency, but with rediscovering the meaning of value itself. A return to things that can't be printed or programmed. Integrity, time, creativity, compassion. Because when the illusions fade, these are the only currencies that will still be worth anything. The first dollar came from nothing, a declaration, a leap of faith, a collective illusion. And yet, that illusion built cities, launched empires, connected the world. Maybe the real miracle wasn't that humans created money from nothing, but that we managed to agree it was something at all. Every bill, every coin, every digital token is a mirror reflecting our shared imagination. Proof that we can build worlds from belief. The danger isn't the illusion itself, it's forgetting that it is one. Because when belief becomes blind, debt becomes destiny. But when belief becomes conscious, when we see through the illusion without destroying it, maybe then money becomes what it was always meant to be, a tool, not a master. So if the first dollar came from nothing, the next chapter of humanity might depend on whether we can finally see that nothing clearly, and decide together what it's truly worth. If this journey through the hidden history of money made you think deeper about the world you live in, stay with us. There's more truth beneath the numbers, more power behind the illusion. Like, share, and subscribe to Hidden Finance File, where money, power, and truth collide.